All right, good morning, everyone. Let's get started. Happy Martin Luther King Day. Don't forget that U.S. markets are closed today. All right, Friday's session, we finally saw some a bounce, some recovery in U.S. equity markets. S&P and NASDAQ both finishing on their highs. Nice little late half an hour sprint as well, which I think is really good for the market. We also cleared that 2,000 number on the S&P again, which I think is also important. We saw a bit of a bounce in oil price, bit of a bounce in copper prices, and so I think markets started to relax a little bit maybe about that. You know, the market's actually really jittery about the oil price moving too much lower and worried about, and I think even just staying low for too long simply because of the pressure that it's starting to put on potentially the jobs market there. Obviously some of the high-yielding debt sector from the energy market, that sort of thing. So the higher oil price, the market's actually been trading very closely in line. U.S. futures, and I think global futures, have been trading very closely in line with the oil price. The oil price is trading better. Markets go better. Oil price goes worse. The markets go worse. That sort of thing. So watch the oil price real closely over the next 2-3 weeks. I think that can really be a driver in equity markets over the near term. We also saw consumer confidence that came out for January, which rose to the highest level in 11 years. So we have seen a couple softer data points as of late in the States, and so that's going to be something that's going to also be a big indicator for us to watch. Some of the earnings have started out, especially out of some of the banks, been a little bit soft. So keep an eye on that sort of thing. Could be a bit of a catalyst for a correction if they continue to come in soft. All right, overnight we had a huge sell-off in Shanghai. As we speak, Shanghai down a little over 5%, if I'm not mistaken, down as much as almost 7% at one point. That has come because some of the big banks have removed margin lending on the equity market. If you guys don't realize it, I think Chinese equities over the past year up about 55-60%, something along those lines. And obviously the economy is not performing well. So there's been a bit of I think maybe some of this forced lending has gone into some of the equity market, and it's just gotten maybe a little bit out of control there. Fundamentals and valuation and prices starting to totally disseminate. So other than that, I mean, the session was very benign. We did have the Hang Seng, which is down almost 2% on the session. There wasn't enough to take down Tencent, which is up about 1%, bouncing nicely on the day, but the rest of the market a little bit heavy. We did see Sydney trading a little bit better. Some of the mining stocks up there, I think on the back of the two-day rally we've seen out of the mining stocks. Maybe the upgrade of BHP Billiton to Goldman Sachs most preferred list a couple days ago, and maybe the subsequent 8-9% rally that we've seen out of London has helped buoy some of that sector there. But we really haven't seen that much of a bounce in prices off of the low. So we'll continue to watch that one. If you look at our chart of interest for the day, this has been one of the real interesting things for me in trying to figure out where we're going here with the gold price. So gold's in dark blue. The black line is the rest of the commodity basket. So gold totally diverging from the rest of the commodity basket for the last month and a half, 2 months. My personal opinion on this is that what you're seeing is that the gold price is starting to react, one, to lower interest rates. You're seeing central banks have actually now started to cut again, but you've seen deflation starting to hit the world everywhere. And even though gold is seen as a hedge against deflation, I think gold is also most preferred in an extremely low interest rate environment. And we've seen yields just absolutely collapse over the past month and a half or so, and that's really been where I think gold has gotten its juice from over the last little bit. Also, some of these guys, the European Central Bank getting ready to probably throw some big stimulus at us on Thursday. We've got Some of the other central banks that are starting to actually cut rates again, starting to get looser in policy and that sort of thing. Even the U.S. now probably not looking to hike as soon as possible. U.S. yield curve almost going looking like it's moving toward inversion, if anything. So I think this is a real interesting move that we've seen here, and just kind of screaming at us that interest rates probably aren't going up anytime soon. All right, if we look at the corporate action for today, we've got just a handful of stocks going ex-div. We've got Barlows, Lewis, Clicks, and RLs. So just keep an eye on those this morning if you're going to get involved in any of them in the morning. Market data out for today. We have Japanese industrial production, which came out a little bit better than prior numbers. Consumer confidence, same thing. And then we've got construction output out of the ECB. So absolutely nothing to look at there. We've got... We're just going to look at the maps. We obviously can't take anything or a whole lot of credence out of U.S. trade today in the U.S. future because no one from the U.S. is really going to be all that involved. And obviously the equity markets aren't going to be open. So, all right, let's get into the maps. First thing I want to look at is the chart's already up here. This is the German 5-year, the chart for the German DAX. And what we've seen here is we've got a real breakout that's happening. We had a couple false breaks on this chart from before. To me, this looks a little bit like an inverse head and shoulder setup. It's not 100% classic, but I think the pattern is there. I mean, this is a monster target. The target, I think, up near 11,500. And what's been really interesting here is that this breakout is essentially happening this breakout is happening when the market's kind of panicking globally at the moment. So to me, this is very, very significant. I think it also is probably a big portion of this is because of what the ECB is getting ready to do. We had a huge reversal off the recent lows, down as low as 93, 96, only at the very end of December. So we've already bounced about 7% off the lows, 8% off the lows. I think this thing's probably going to keep going. I think some people are probably wrong-footed on here. So just watch this one closely. This could actually be a nice leading indicator and could catch a lot of people on the wrong foot. All right, next one we get into is ArcelorMittal, not one that we show a whole lot anymore. The stock just seems to have kind of become irrelevant over the past few years. But dropping out the new lows below 22.5. We dropped $22 on Friday, and definitely looking like we can potentially move even lower. So watch this stock today. I think that we've got quite a low target here. I wouldn't be surprised if this thing drops down into the high to mid-teens. Right, Naspers on Friday. We talked about this thing at 1560, I believe. Yeah, that was a level 1560. You can see there we dropped 1560 intraday, came back, closed at 1560 on the dot. It feels really good when I get it right on the dot like that. Anyway, that's the support level that we talked about. That's where we broke out from. I mean, there's a couple different ways that you can look at this, but there's obviously some sort of support there. The fact that we closed back at that level on the number obviously gives a little bit more credence to that. So watch it around that level. If we get below there and can hold below there, then I think we can probably go down and test closer to 1400. But if not, we might have a little reversal back to the upside there. Right, if we look at Sasol also making a nice bounce here. On Friday, finally was able to get a little bit of traction somewhere. It was the best trading day we've seen out of Sasol in probably at least a month. There's up here around 13.8, maybe 88, close to 13.90. That's on the daily. If you look on the 30-minute, you can see here that level is a little bit lower, and it's closer to where we closed on Friday. So yeah, maybe around, call it 387. So I would peg this level at 387 to 390, somewhere in there. We're going to need to see it get above that for it to have any sort of chance to continue to run. If we start to turn over and fail from there, then I think the stock can fail and fail hard. Personally, I think it's still very expensive relative to what their earnings are going to be, and you're going to start to see those earnings revisions come out and be quite shocking, if you ask me. All right, the last one that I'm going to show on the day is ShopRite. ShopRite has made this breakout kind of in a I think this is a little inverse head and shoulder here. If you look at this, not classic obviously because of where all this is coming from. Anyway, this is to me what it looks like here. If we draw it that way, then the neckline's probably down here, but either way it broke out up here, taking out the recent highs at about 172, and we're really coming back down. We've had 1, 2, 3, 4, 5, 6 days in a row where we've touched 172 and managed to hold on support. Right now it's starting to look a little bit like a bull flag to me, and or a descending triangle formation, whatever you want to call this. Bottom line is the chart, the setup really looks bullish to me. I think this thing can potentially pop to the upside here, and if we make a move through to the upside here, I think we're going to get up close to $200. So just watch this closely. It could have a lot of legs on it if we can break out from there. And that's it for today, guys. Thanks a lot.